Time now for Options Corner. Joining us to take a deeper look at the chart for Palo Alto's Rick Ducat, lead market technician. All right, Rick, what trends do you notice when you look at this chart?
Yes, good morning. Underperforming the broader market here, but more importantly, underperforming its own tech sector XLK ETF, up almost 21%. Meanwhile, Palo Alto up only about 3.5% or so. You mentioned the CyberArk acquisition. Pretty easy to see where that came in on our chart. Right here, the street did not like the initial reaction here, but since then, shares have rallied and we've taken out those initial highs. We topped out recently near 223.61. From there, though, we've had a bit of a give back here, and shares for now are holding on to a supportive area here. These two green lines between about 196 to 198 represent some important lows that we established during our climb to the upside here after we have broken down out of this sideways symmetrical triangle type pattern. Meanwhile, when we look at our other studies here, we can see RSI has deteriorated, slowing down. We are now at a reading of about 37 here. Downward trend line still in play. Meanwhile, price has fallen below our moving averages. Our faster 5-day EMA lines up very closely with our medium 63-day EMA here around that 205 level. The 251-day EMA comes in as potential support near 191. If we were to look at some of our other studies here based on the expected moves, down here we can see our supportive area lines up with a heavy volume node, so 196 to 198 stands out. To the upside here, we can see that we have our resistance confluence. 205 to 207 is where our moving averages and our old highs come together.
All right, thank you, Rick. Now, do take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. Tom, what's the approach you would take for an example trade, given what Rick just went through with regard to his performance this year, and we've got earnings in front of us?
Yeah, the stock's still just about 10% below those all-time highs that we recently hit. So it's had a good run over the past couple of years, like most of the cybersecurity names. But anticipation relatively elevated going into this report. Really high implied volatility levels going into this report, especially in the near-term options. Option market pricing in about a plus or minus 7% move in the shares. So I set up a strategy that's neutral to bullish that takes advantage of that near-term implied volatility. I looked at a custom four-legged spread where I'm taking two different strategies, combining them to create a neutral to bullish stance here if you think the stock's going to go higher. So we're going to go out to the November 21st monthly options. Those expire in just a couple of days. We're going to sell an out of the money put vertical here. We're going to sell the 190 strike put. That's about $11 out of the money to the downside, where the stock settled from yesterday, about 201. Sell the 190 put, buy the 185 strike put. So a short $5 wide, neutral to bullish put vertical. And then that's going to help finance the purchase of an upside call calendar here in Palo Alto. So we're going to buy the November 28th weekly options that expire in 9 days. We're going to buy the 215 strike call. That sets up with about that one standard deviation move that the market's anticipating at this point. You're going to buy that November 28th 215 strike call, sell that same 215 strike call in the near term November 21st monthly options that expire in a couple days here. So a 1 week wide call calendar to the upside that's financed by the short put vertical. It's going to cost you nothing, right? You're actually going to collect a credit of 30 cents on this four-legged spread here. Now, you can see here from the risk profile that the apex of profitability at or near that 215, which lines up with the one standard deviation move. Now, where you come into some problems is below that break even, 189.70 to the downside, your break even. So the stock can do nothing. You can still profit on this one. You want it to go up towards 215, but you've got a big cushion to the downside before you start getting hurt below 190.
All right. Thank you, Tom. That's Tom White, senior options contributor and co-host of Fast Market, with an example trade for Palo Alto. Appreciate that.